Welcome to the July 2020 Market Update. I'm Marty Pospischil from Pospischil Realty Group, and I'm going to bring you up to date in a very brief amount of time on what's happening in real estate in Vancouver. Okay, so let's start first of all with what we expected to happen. And as you all recall, judging by what's happened in the past over the various recessions and so forth, the forecast was for our market pricing to drop abruptly once the lockdown lifted, and for it to hit bottom sometime this summer and then gradually make its way back. And that all makes sense. Businesses have closed down. Many people have lost their jobs, unfortunately. There's been a lot of trauma to our economy, and a shutdown on the economy, a negative impact is expected, and prices were expected to fall when inventory levels were going to shoot up. So this all makes a lot of sense. And in fact, another thing, here's a really interesting slide I picked up recently, is we're effectively not having any tourism now in BC. And an interesting stat is 5.1% of all employment in our province depends on tourism. More than 500,000 jobs. It's not happening right now. So there's going to be a fallout from COVID-19, absolutely, and that's going to happen. But let's look at the actual numbers. This is really interesting. Year over year, compared to last year, the total number of listings are down, not up. We had over 1,000 more listings this time last year, and the total number of sales compared to last year are up. We're at 866 sales this past month. And more shockingly, the sale prices are up. So what's actually happening here? This is kind of contradictory to what the forecast was. And this is also very interesting. If you look at this graph, you can see our number of sales hit bottom in April after COVID, when the doors opened up and we all came out. That sales activity shot right back up, almost back to index 100, which is the pre-COVID benchmark in February before the mid-March shutdown. So the sales are actually increasing back up. So what's going on? Why is our market so hot? Well, there's three reasons. You've probably read my recent email, and one of them is what I call the post-pandemic renaissance. We've been locked down, things were gloomy, the weather was bad, and then all of a sudden, we were able to come out. The weather's beautiful. People are out there, and guess what they're doing? They're looking at real estate. They're buying property. People are listing. There's activity going on. The post-pandemic renaissance is that bubble of activity after being cooped up for a few months. Number two, low inventory levels. We expected the inventory levels to shoot right up. It didn't happen. And it didn't happen because a lot of people, uncertain about the market, didn't list. They said, let's wait until we know exactly what's happening with our market until we list. So the inventory levels didn't shoot up yet. And number three, historically low interest levels. The Bank of Canada, under the new governor, Tiff Macklem, wants to be unusually clear that interest rates will remain low for a very long time. They're following what they call forward guidance, indicating that they will not raise the rates until capacity is absorbed and inflation hits 2% targets on a sustainable basis, which they estimate will take at least 2 years. So these low interest rates that we're experiencing right now, and I just saw a 5-year fixed mortgage at 1.99%, virtually free money, incredibly low rates, is our third point why our market is so hot. And it's not just happening in certain pockets, it's happening across the board. Every area is up with the exception of New Westminster and Port Coquitlam. The activities are down a little bit, but in Greater Vancouver and the Lower Mainland, we're seeing this activity shoot up everywhere. Very interesting. So what's hot and what's not? As you remember, what I use as our guiding factor to determine which pockets are hot, which products are hot, is the sales ratio. And if the sales ratio is below 10%, it is what we call a buyer's market. If it's between 11 and 20% or 12 and 20%, we're in a balanced market. And if the sales ratio is higher than 21%, we're in what we call a seller's market. Prices are rising and the market is favoring the seller. So let's have a look at where we are in our different market areas. Vancouver Westside detached houses, wow, we're at 17%. Now, we haven't been at 17% for detached houses in the West Side for some time. We're seeing a recovery there. Let's look at condos in the West Side. Condos in the West Side, 22% sales ratio. Condos in the West Side have jumped into a seller's market. That's really good to know. And let's look at the East Side. Vancouver East Side houses, 26% sales ratio. Super overheated market for houses on the East Side. And lastly, let's look at the East Side condos, 30% sales ratio, even slightly hotter than the houses. Very interesting activity. Right now, market snapshot in July, our market is extremely active. I believe we're in a bit of an activity bubble. I think that fallout from COVID-19 is coming. It's going to affect our market over the next few months, but for the current time, we're extremely active and you're seeing the different products are hot. Thank you for joining me. That's the July 2020 market update. And remember, anything is Pospischil.